Wagwan, all you multifamily maniacs. My name is Shelon Hutchinson, also known as Hutch the Marine Investor. And I know I said that season 3 is going to be mostly about our veterans. The person that I'm talking today is not a military veteran, but what he does and his business is they are structured around a cause that we feel strongly about. Additionally, because we have partnered on a deal out in Texas, and we brought investors to the deal, and most of these investors are military veterans, mostly Marine veterans. It's important that we talk to these operators who are helping us to, one, assist with the affordable housing crisis, and also help our veterans to get their time back by creating investment opportunities through passive real estate investing. So today we're going to talk to Craig McGrother. Craig is the Director of Business Development at Lone Star Capital, which has acquired over $500 million in multifamily real estate. He has a passion for sharing his enthusiasm for multifamily investment and serving Lone Star investors. So prior to joining Lone Star Capital, Craig spent 7 years in a real estate sales industry and sold over 100 homes. He graduated from the University of Arizona with a degree in urban and regional development. So he is a true professional when it comes to real estate. So Craig, I want to extend my appreciation for you joining us on this show today. Welcome, brother.
Thank you so much for having me on the show. It's been such a pleasure over the last couple of years to get to know you, of course, to partner alongside with you, as you alluded to, on the Houston 3 property portfolio, which was a long-winded closing process, but got through the finish line nonetheless. And just to all your listeners who are veterans or active duty military, and to yourself, thank you so much for your service and for your commitment to taking care of our security here in faraway lands. So just want to start out there that my gratitude for what you guys do and for everyone in this firm collectively together is really noted and appreciated. So thank you for all your service and your listeners and whatnot. And I feel honored to be speaking to some people who may be transitioning in or out of the military, or looking who just exited the military and are looking for safe vehicles to park their money with trustworthy individuals like us here at Lone Star Capital to help grow and preserve their wealth. So thank you so much for the platform today and to connect.
Thank you so much, man. You say something important there that I want us to drill down on. See, in every investment, there are risks. And the level is good to take risk, but also not be risky. How do you take a conservative approach towards real estate investing? As a Director of Business Development for Lone Star Capital, this is the best person to ask the question. So before we get into that, Craig, can you tell our listeners a little bit more about yourself and your current focus?
Yeah, absolutely. So just about me, the firm, I'm the Director of Business Development, as you alluded to, which is basically doing all the calling, the outreach, and the structuring of the capital stack in our multifamily real estate opportunities. Effectively, if we get a deal, I'm the one that's banging the lines to raise money from our investors. And then when I go to conferences, meeting with great people like yourself, it's connecting everyone together, and it's basically making sure the equity flows our way for opportunities. When we buy an opportunity, let's say multifamily project in Texas, of course, we're going to have to raise somewhere between, call it 10 to maybe $40 million. And it's my role and responsibility to fulfill that equity in our opportunities in a time condensed period of time. So what I basically do is do all the selling and the approaches. I also need to understand the deal at a fundamental level, the inputs, the outputs, the numbers in there that create the returns and the projections that the opportunity displays, and how we get to that conclusion, if that makes sense.
That is great, man. I appreciate you doing that. Now, Craig, do you have a favorite real estate quote or mantra that drives you?
That's a really good question. As Mark Twain, of course, said, real estate's something they're not making any more of. So it's always a great time to buy it.
That is correct. Now, to narrow down on the conservative approach, Craig, you mentioned that we always have underwriters looking at deals, right? And there's a significant difference between a lead and a deal. Considering the conservative approach as the business development, how do you identify what is considered a deal before we start actually bringing this to our investors?
Yeah, I think from a fundamental perspective, it's got to hit some of the checkings and the buy boxes on our end to make it make sense. We need to have a certain size of units for us to feel comfortable and confident to want to move forward with the opportunity. So that can mean a couple of things. That can mean unit count, that can mean return profile, but we typically speaking are looking to acquire deals just from a non-starter perspective. If it's less than $30 million, we probably aren't going to look at it anymore just because it's really time consumptive on our end. If it's sub 150 units, it probably doesn't make sense. If it's in certain sub pockets in areas where there's FEMA problems, environmental issues, if it's in a flood zone, if it's something in manner in which there's some hair on it or there's and unnecessary risks, we're not going to look at it there, if that makes sense. So those are some things that we look at. And then as far as what makes a deal, we need to see a compelling return profile on what the key thing is risk adjusted. So risk adjusted is a very subjective term in the business because everyone says their underwriting is conservative, but that may not be true. So what I mean by that is when everyone looks at a deal and when everyone has the opportunity to invest in an opportunity, they're going to see something that is going to solve for somewhere between a 16 to maybe a 19 IRR, right? So at Lone Star, we want to solve for maybe something a little different. We want to look for deals that are in that 14, 20% return bucket, right? So why 14 to 20? Why a little bit higher? Why a little bit lower? And what's the variation, right? Different deals have different return profiles one way or another. There is a deal at 20 IRR perspective that may be a junkier deal, or maybe a Class C deal, maybe something that has a little bit more hair or let's profile it on it, but has larger risk, but therefore we're going to get paid for risk. And then on the 14, some people might say, well, that's too low for me. It's all on the risk adjusted basis. This could be a 2000s property, very well appointed, very nicely updated that if bought correctly is a lot safer of a deal any day of the week over that 20 IRR deal. And we're all looking at the same deal. So let's say if you see 10 syndicators looking at one deal, you're going to see 10 different projections, unfortunately. So this is not a copy and paste like for business. It's a little art and science there. Of course, the science is projections here and there, but then the art comes into play. So I'm going to change this number here. I'm going to tweak this. I'm going to change this. I'm going to create value there. So it's not all universal across the board. So what we do at Lone Star is put the best brains, the brightest minds together, in our opinion, to deliver reasonable assumptions to present to our investors where we get those projected returns. And we definitely like to make sure that we're not over projecting and overselling a bill of goods that we can't deliver upon, because we know at the end of the deal, whether it be a 3 to a 6 year hold, we're going to have to answer for our underwriting for the better or the worse. And it better be for the better. And if you're the group who, let's say, returns 15 IRRs every single time, that could be great, but it's not great if you were projecting a 20% return, but it would be really great if you're projecting a 12% return, then you exceed it. So life is all about reality and expectations, and how we can manage both of them together. So it does not behoove us or serve us to project and present to our investors the highest return every single time, because we don't want to train people for that illusion that's always the case, and that's what deals should be. If we have a deal that's 2004, 2008, or something like that, something 2000 to 2010 vintage, that deal profile is going to offer lower returns, most likely, than a 70s or 80s deal. So it's important to understand the why and the makeup of deals to where we get to the conclusion of the return profile.
That is amazing. Now, look, there's a lot of leads coming in, and Lone Star Capital prides itself in being the subject matter expert in specific area or region. Right now, the focus is Texas, right? So you got some properties in Dallas, Houston, and I believe one in San Antonio.
Yeah, Dallas, Houston, San Antonio. The flagship market, of course, is Houston, where we've got the bulk of our portfolio.
That is nice. You mentioned that you had some of the best minds that are filtering through these leads to identify deals. What does a process look like before the property comes to an investor with a projected return?
That's a great question. And it's such a interesting take there is, how many properties do we have to sift through in order for us to find an opportunity that we feel comfortable with presenting to our investors? And to even that tune there, I'll say there's been opportunities and situations like a deal last year where we really liked the deal. We thought it was going to be a grand slam home run. We're going to buy it. Well, in that acquisition process, as fixed rate debt buyers, the treasuries ran up 75 basis points while in escrow, which recently there's been a ton of fluctuation, but people who are economists and people that have followed this, bond traders and whatnot, can speak to the fact that this is likely one of the most volatile times in history, right? Is what we're experiencing right now. So that deal moved 75 basis points during the escrow process, materially changing the deal. Now, no one likes this on the buy side or the sell side or the brokerage side, but we need to do what was called a retrade, basically saying, hey, this changed on us. Therefore, this deal today is not worth this price. We would love to pay this price, but with where debt is right now, we can't marry the two together. So two things need to happen. one of two things is going to happen. You need to change the price to accommodate today's debt, or we're going to leave contract. Unfortunately, the seller did not budge on their price. The deal has not sold yet today, by the way. And we ate about $1 million on that deal and some costs for everything associated there. So that just goes to show the sifting process. And even if we do get a lead locked up, that does not mean we're going to buy the opportunity, because for us to have the Lone Star stamp of approval on any opportunity, we take that responsibility really seriously, and we cannot have a flop on our resume, especially as an emerging sponsor. Albeit we've got $500 million of assets under management, we are really, in New York City, people can appreciate this. We're small potatoes in the scheme of things. Although we're not a scrappy startup really anymore. We're the One World Trade Center. This is super crucial to make sure that we've got no blemishes and we feel uber confident. So the deal materially changes. Therefore, we were out, as Mr. Wonderful say, and therefore I am out, right, on Shark Tank. So we had to walk away. So we will sift through, back to your point, hundreds of deals to buy one. Okay. We're always putting LOIs out there, letter of intent offers on properties to try to facilitate transactions, but that does not mean that we're going to buy everything. And we put a lot of that out there just to make sure that our brokers know that we're active buyers, and to also provide them feedback, maybe help them get a price adjustment on their listing or their offering. So it is a long process to buy one deal. We like to buy about, call it 6 to 8 to maybe 10 deals a year, depending upon the capital market environment and what's possible. But realistically speaking, we're looking through hundreds of deals a year to only convert on a couple of them and to close and transact. And then what comes to mind and brains working at it, we've got Rob Beardsley, who legitimately wrote the book on underwriting. He's written 2 best-selling books in the niche category. We've got Brad Oliver, who's our director of acquisitions, who is underwriting deals all the time. So he is awesome. You're going to pull the book up. I love it. Yes, exactly. Those 2, buy them if you can. Really a wealth of resources. And then, of course, the other person and gentleman who's really the unsung hero to our firm, who's very low profile. You had the pleasure, we all had the pleasure, I should say, of eating with you. Of course, our active duty military veteran in New York City during our office mixture with Kent Pechkowski, who is a senior tax attorney at MetLife for north of a decade, who is sifting through and looking at everything. And of course, Aaron Petrie as well, who's the executive vice president of Radiance Living, who has about 2 decades of property management experience, who sits in Houston and knows properties inside and out, has been through a lot of these properties that have gone full cycle multiple times through other shops prior to joining us. So when it comes to the brain trust of a firm, that's a very good example as to why we are the right people to execute and to invest with.
Now, you went through a lot there, man. And one of the biggest things that I think folks struggle with is, one, creating a good track record to where they have demonstrated competency to attract the higher level brokers, right? Because brokers want to bring the deals to a team that they know that will close on the project, but not also close on the project, but also will give them a no BS or no bad BS, no bad belief system with their underwriting process, and also give them the truth about what's going on in the market, not only based on speculation, but because they own asset in the market that is performing at a certain level, and they have the team who are maximizing the performance of those properties. So they can objectively look at a property and say that this is a property that will not perform to your pro forma based on what you put in this sweet deal package. Obviously, Lone Star Capital have demonstrated some of the track record and also build those relationships. And I had a great opportunity whenever we came out to Houston to walk that 3-pack, the portfolio, to sit down with a couple of brokers, and we walked that 90 units that was purchased right adjacent to the property that you guys already have inside, right next to the gas station. That was a cool experience.
Yep.
Yeah, Zool. Yeah, that was a cool experience to actually, one, see how relationship with brokers. So see the importance of having a relationship with brokers in the market, but also be able to meet with a owner and purchase strategically located property that one, provided the economy of scale, but also maximize the efficiency of management. And I really appreciated being able to be a part of that assessment before that acquisition. So being able to watch that transaction go through what was very informative for myself, as well as a capital raiser, capital allocator, and a syndicator, to be able to see the way that the guys, you think it's what paraphrasing right now, not a small business, but $500 million is the big deal to a lot of people, man. You know what I mean? So it's really good to be able to see how you guys operate and the level of intricacy or the level you guys pay attention to the detail as you guys communicate with brokers, also communicate with sellers as you go through the acquisition process?
Yeah, without a doubt. And actually, to your point there, I just saw Jaleel, who was the broker of that property. Shout out to Jaleel. He was a great guy. He had a really interesting relationship with the seller. Houston's actually a very diverse city. Many people know that, like New York, Houston, maybe one other place. So he was from the same background and community as the seller. Therefore, the only person that he wanted to work with and talk to was Jaleel, interestingly enough. And then on top of that, we were the buyer of choice in that opportunity, to your point there, because we had 300 units right next door. So it felt like a glove. Now, that property was substantially smaller than anything that we would normally want to take down, but it went into the camp of story, buyer of choice, right next door, economies of scale, good fit, good upside, good basis, made sense. So to that point there, it was a perfect storm of positive opportunity, but typically speaking, that would not be in our bucket. Certain times it's important. And to go full circle on that, to point of relationships and whatnot, we were just in Houston at Meritage, which is part of the 3 property portfolio that, of course, you brought your investors to and raised capital on and allocated equity on. And we met with him. He was at our event, as well as a couple other brokers and lenders and people we've done business with, and of course, some other capital allocators and our investors. So relationships are everything. This is a people business. I know we're getting into this digital world, AI world, and automation is that, but there's no substitute for stuff like this. Just building relationships and being good, reputable people that are transactable. And the interesting thing right now, back to the point of acquisitions and pricing, is now more than ever, certainty of closing is probably equally as important as price, because right now it's not guaranteed that every group can raise money. Just because someone comes in and can pay a high price, the seller does not necessarily think, okay, great. No, that money needs to be raised, and the seller and the brokers have to feel confident with the syndicator that they actually, in fact, have the juice, the legs, and the ability to pull off the acquisition and to bring the capital there. And then also to execute the business plan, because they don't want to sell to someone who's got this crazy business plan. They're like, this person is out of their mind, and then have to respond to that and have to sell it when they're disappointed in the future. So they do factor things like that into the equation. They actually want to look at how we're projecting and seeing the numbers, because they are curious themselves. They need to know what's going on in the market and what is actually truly market. But it is crucial for them to see our interworkings and how we view the world through our lens.
So Lone Star Capital right now has this big audacious goal, right? And this is something that even gets me excited. So I can imagine how much you get a high net worth individual excited, right? The goals for Lone Star Capital over the next 12 months, which was a few months ago, right? And the goal right now is $300 million in acquisition. As the director of business development, how much of a pressure that is for you, and how do you plan on executing on that big audacious goal as the director of business development for Lone Star Capital?
Yeah, for sure. And to your point, we run a very lean operation. As for the scale of the property that we have, and for the corporate team, it's not a whole building like Goldman Sachs next door for us here in the World Trade Center. It's very small, very lean, but we're very mighty with what we can accomplish. I think, to answer your question, when I was starting off in a business with Lone Star Capital after residential real estate, I felt a lot more pressure, like the other rings on my shoulders. And then I realized that just control what you can control and do what you're going to do. And if you put the work in day in and day out, and you grind it out, and you show up every single day with a good attitude of enthusiasm, and you do the work continuously and go above and beyond and treat people well and do what you're supposed to do, then there's no pressure or no worries. So to be honest with you, I don't really live with stress in my life, because I do everything every single day. That is calling people when I'm supposed to call them. That is following up with people when I'm supposed to call them. That is doing outreach. It's going above and beyond. That's setting things up weeks in advance before conferences to make sure that we put ourselves in the best situation possible. So to answer your question, I used to feel a lot more pressure, but now it's just business as usual, day in, day out. We don't want to put a square peg in a round hole. As I alluded to, the investment world was really slow last year. We had to walk away from a deal.
Right.
The biggest thing to me is to provide folks like yourself and anyone else that if we say we're going to buy a deal, we love that deal, and we know in our heart of hearts that deal is going to close and it's going to transact, and your investors are going to get what they signed up for. So unfortunately, there's times where that materially changes and we have to walk away. And there's going to be years where that's going to be easier to achieve, and years where it's going to be harder to achieve. That's not going to change your effort. I think I was more concerned, more worried, kept me up at night more, but now I sleep easy knowing that we're going to put the effort and the work in, and we're going to do everything we can in our power, and we're going to grow accordingly. And I'm going to do what I have to do to get where I need to go to help the firm out. But I would say that my mindset has changed, just putting in the work and leaving it up to God to make sure that it's all good. So
we can go back and watch this recording, and if my assessment is correct, I think it is. When I asked the question about, when I asked the last question, y- listeners, if you listen to this, take some time to watch a YouTube video or maybe some of the shorts that we created on these questions. And Craig mannerism shift. Sat back in his chair, legs crossed, and he spoke like a boss about confidence. And why I'm assessing that is, when you are clear on where you're going, it gives you more confidence about what you can accomplish. But one of the things that Lone Star Capital prides itself is doing is definitely bringing great minds together. We are part of Raise Masters, and we have some really cool people in there who are committed to ensure that they are the best stewards of capital. And we are partnering with the best in class operators to ensure that those capitals are allocated in a way to where it provides our investors a level of the best level of safety, right? Because as we all know, there's risk in everything that we do as far as investment goes, but placing a capital with the best in class operator to provide the best level of safety and also the best possibility of return. And this is the difference between a speculator and an investor, right? Is placing the capital where you know it's going to grow, at least outpace inflation, so you're not losing. The conversation of the day is capital preservation, because look, last year you guys also capital walk away from about $700,000 in hard money that was placed on a property that they was seeking to acquire. But by the time as the transaction progress, the deal no longer makes sense. And it's easier to walk away from some seed money than it is to lose investors' capital. When you're choosing the best in class operator, you're not looking for the best return, the 20 plus IRR. You're looking for the operators who has the best possibility of preserving the capital and also growing your capital. I did not want to dive into the question about IRR and what it is and why it's important, why sometimes we lead with IRR and why some of the more sophisticated investor prefer that number, right? I wanted to leave that until this point. Now, considering the conservative approach that you take towards this business development, especially for this year, acquiring the $300 million in property this year, I remember Rob was saying that pretty much you have to get a lot of these properties on the contract by, say, September, October at the latest to be able to close by December. That is no easy feat. And when you're confident with the team and the people that you work with, then we definitely can get that done. But if you look at it too, man, it is not a bad goal to fall short of, even though I'm confident you guys are going to rock it out. So with the conservative approach and also the big audacious goal, why is IRR a good measurement for our investors?
IRR is basically the return profile metric that you're getting to, right, on an investment. So that's like the annual, internal rate of return. IRR is what it stands for. So that's a yearly based metric. So if you have a shorter deal window, the IRR will be higher because it's compressed time period. So you look at IRR and equity multiple, right? So you might have a 20 IRR, but it might only be a 1.8x multiple over a 3-year hold. You might have a 15 or 16 IRR, and it's a 2x equity multiple over a 5-year hold. So the shorter timeline, the more compressed and higher IRRs can be, but your equity multiple is not going to be as high, right? So IRR is important because it looks in the benchmark to assess the return profile and the risk taken and associated to make a deal. So IRRs can be artificially manufactured in many ways, and everyone's manufacturing them one way or another. So that's not a diss to anyone in the business or anything like that. But IRR is the metric. It is what you're looking at when you assess deals, okay, as an investor and also on our end. But what one has to be aware of is how does one get to that conclusion of those numbers? And you can create any number under the sun to get where you want to go. But in reality, that can be fabricated one way or another. And what I mean by that is people might tinker this number here, tinker that number over there, change this expense ratio, bump rent growth over here, lower payroll over here, do all these crazy things to engineer a certain return profile. But you have to answer it at some point. What we like to do is actually beat up our numbers, because we don't want to train investors to think that, even if we think actually in our heart of hearts that the deal actually might be a 19 or 20% return, we're going to try to manufacture it down in order to train our investors for more conservative like returns. And if we can exceed it, great. Or if we come up a little bit short of what we thought was conservative, thank God we didn't show you a 20 and it ended up being a 15. So it's all expectation management. And it's also just being realistic here on all ends. And I say this to anyone: if you're a capital raiser, capital allocator, or an investor, if you're looking for the sponsor, like us, Lone Star Capital, the GP sponsor, if you're looking for the highest returns or how you can make the most amount of money on your end and not putting the investor first, then it was nice to speak with you, but talk to me in 5 years when the deal you chose underperformed and your investors are pissed. and we'll let you know how the deal that you passed up on went and how you should probably work with us. So I know that sounds a little bit cocky and a little bit braggadocious to a certain extent, but I'm very passionate on that because I think a lot of investors really miss that mark and capital allocators miss that mark and don't actually realize that you can engineer anything in Excel spreadsheets to get to your numbers. Okay. A lot of investors, capital allocators, and whatnot don't have time to really learn every single nuance to underwriting. Some people can get sold emotionally on the before and after kitchens, a sexy video or a really nice brochure, but that has nothing to do with how the deal will actually perform and what will be put in place and what your downside protection is. So I really urge everyone to understand the sensitivities and the modeling and see a stress test to know how that deal may actually would perform or not perform depending upon market conditions.
Yeah, definitely, man. IRR, I see a lot of the more sophisticated operators are leading with IRR because investors understand that, right? It's going to be the time value of your money, right? At what point do you receive your return, whether it's through cash flow or refinance or a sale in the property. So it's really important to understand the different strings that an operator is pulling on to get you that return. See, a few years ago, refinance was a big thing. And that some investors like that, but also some investors understand that might not be the highest velocity of my capital, because if I get $100,000 back that I invested versus a $200,000 over 3 years, the IRR might differ a little bit. And I might not be able to invest all that money that I have returned into another investment to actually get it moving. So it's really important to understand. And I really do appreciate that you guys actually wrote the book on underwriting. Rob Beardsley wrote the book on underwriting. So it's important to pay attention to who is saying what, and also listen to be able to assess the character of those operators and see where their priorities are. If they are income generating for their company, and that's where what their main focus is, even though that's important because it keeps the light on, and not if they're not focused on generating the most return for their investors, it's really important for you to assess that. Because look, you as a passive investor, you're looking for a couple of different things, right? You might be at a place where you are still active in the military or active in corporate America, and your time horizon for the growth of your capital is a little bit longer than some, right? And some folks, you might have already retired and you are now taking your money and you are investing for cash flow. So if you invest for cash flow, chances are you're going to look for the deals that going to give you maybe a higher cash and cash return, because that will be your income stream. But if you're looking for the velocity of your capital and IRR, and you do multiple investment, you have a diverse portfolio, and you want to choose what investment is going to give you the best velocity of your capital, and IRR is a good matrix for you to mirror up those different investments. And there's several calculators out there that you can use to calculate your internal rate of return to ensure that the investment that you're making is consistent with your investment strategies. And it's important that you actually know your investment strategy as a passive investor, because it helps you to choose the right jockey, the right operator, and also the right deal to that end. Craig, we can talk about these things all day, every day. One of the things I want to talk about before we dive into the focus round, how is Lone Star Capital structuring deal to help with addressing the affordable home crisis, and maybe give 1 or 2 or maybe 7 examples of properties that you guys have maybe structured or restructured towards that end.
Yeah, to your point, there's an affordable crisis going on in this country, and there's a lot of new supply coming online, but unfortunately, that's really more for the more affluent people, not for the folks who are just struggling to get by. There's no secret that inflation is destroying everyone's pocket. That's mine, that's yours, that's everyone associated. No one is immune to that unless you're a billionaire, a centibillionaire, something like that. But everyone's feeling the pinch one way or another. And unfortunately, that affects the more impoverished or socially economically lower income producing folks in the country, right? For the better or worse, service people, workforce housing people. So what we do at Lone Star Capital is we of course buy value added opportunities, right? But the other strategy that we have, it's the mission-based premise and also financially incentivized premise, which is we do property tax abatement opportunities where we basically eliminate half or the entire property taxes associated on a deal. In exchange for eliminating that, we preserve partial or 50% affordable units, where basically half the property has a rent control there. So it's a win for the city, it's a win for Lone Star, and it's a win for the tenants who get better and safer communities to live in than what the options may be for that certain price.
Yeah, and that is great. That was one of the things that I really appreciate about that 3-pack that we did in Texas. As I walked those property, Craig, with you guys, and I saw the families going in and out of the elevator or using the amenities, and understanding how we get to impact a community, right? And we're not focused on just always profit, right? But how can we create win-win-win situation where the seller get to achieve their business plan, Lone Star Capital and its investor and our investors get to achieve their investment goals. But additionally, how do we structure the deal to ensure that we're taking care of these community that we are taking on a responsibility? Because look, when you invest in apartment complexes, we are taking on a responsibility to improve the quality of life for all the residents that live there. That's not a task that we take lightly, because these are people helping us, right? So it's happiness for investors, because these are their kids' college tuitions, right? These are their retirement fund that they're relying on for later dates. But also we are enriching community to ensure that people have a clean, safe, and the most affordable within constraints, right, place to live in these communities. So kudos to you, Craig, and the Lone Star Capital for ensure that you can maximize profit, but also maximize the quality of living while also preserving some affordability for some folks who are or may not be so fortunate. These are our teachers. These are our firemen. These are our single parents. These are parents who will maybe work in a few jobs. And when you look into Meritage or Beckley, and you look into these clubhouses, these are places where a young kid can come and sit for a little bit. It's a safe environment. It looks and feel well. These are gated community, I mean, in some cases as well, that give people a sense of belonging in community and being a big one as well.
Safety, the ability to not live in anxiety, the ability to live in a nicer place than maybe what they could have afforded before. We get incentives where we can make the numbers creative for us, the investors, and everyone can win. We can't stress this enough. Real estate is a human business. Okay, so when we buy something, we have a duty as owners and as real estate professionals to provide an opportunity in a better place for people to live with safety and where everyone can win. And I know sometimes people just look at real estate people as just a bunch of people that are just trying to get rich. And yes, I'm trying to get rich, but I'm also trying to do well on the right side. And that's helping your investors. It's helping myself. It's helping my future family, but it's also helping the tenants and the families that are there. And you mentioned this. These are blue collar people. Workforce housing is what we buy. Okay.
Right.
This is where, the people who really move society, and this is the working class people where they live. All of us cannot avoid the working class people and everything that we do. Good luck. These people are to not be there. So to take care of these people one way or another, provide them an opportunity is something that we're really passionate about.
That's awesome, man. I appreciate it, man. Craig, we're going to lead into the focus round. This is where I ask you more like a fire round, right? And the focus is, what do you do for fun, Craig?
Yeah, I like to hang out with friends. I like to talk on the phone. Believe it or not, I'm a little bit chatty. And work out, play golf, play pickleball.
Awesome. What is one opportunity that was a game changer for you?
I think having the ability to become friends with Rob Beardsley in summer of 2020, it was COVID. Nothing was going on. He came out what I thought would be for a couple of weeks in Arizona to hang out with my mutual friend and I. Turned out staying out for 3 months, and we became best friends, talked about real estate every day. And here I am in the One World Trade Center. Life is not linear.
Yeah, relationship matters, man. What is your number one communication tip?
I would say put everything in email, because if you want me to lose something, send it to me a text. If you want me to remember something, send it to me via email. I will never neglect my email, but I get a lot of texts from spam, this, that. Very few spam things hit my item and pertaining to work stuff. So if you want to communicate with me best, reach out to me via email, please, for the love of God.
Got you. All right. I'll make sure I send you more email, Craig. All right. So what is one thing you wish you understood earlier?
The value of quadrupling down on relationships and investing in people.
That's great. So the final one is the S. To what do you attribute your success, Craig?
My parents. I'm very dyslexic. I'm very ADD. Learning and reading comprehension was brutal for me. So my dad basically set up an environment where success was the premise and what we were looking for. And he showed me the example of what it meant to get to work, put a suit and tie on, show up every day in his own profession. And my mom was there basically reading books to me to make sure that I could actually understand what was going on, and would spend all these extra hours putting in time. I got some abilities and skills my siblings did not get, and vice versa. One way or another, I was really slow there, but if it wasn't for my parents, I would not be here today. So I owe them everything.
Yeah, that's one of the things that I've noticed is that the older we get is the more appreciation we have for especially our parents, rightfully. So kudos to your parents for raising a good man. And I've had the luxury of, I've had some good conversation with you. And I always appreciate your focus on the individual that is in front of you. It's really clear that you value that person and they are the most important person whenever you're talking to them. And I like that. So it's good to make people feel important And not just me, I can see that how other people value your attentiveness in what they're saying, how they're saying, and just their presence and their time. So kudos to you and your parents for instilling some of those greatness into you, brother. If our listeners want to get in touch with you, Craig, what's the best way to do that?
Yeah, absolutely. Well, first off, thank you so much for giving me the platform to speak to you and your people. Thank you so much for growing the relationship, being intentional about it, staying in front of us, and just for you being you. Thank you for your service and for all people that you work with, your veterans, your community. Thank you to all that have been active duty. Just want to say that once more. Our gratitude really those can't be stated enough. So just thank you so much. I'm internally grateful for all that the Marine Corps has done for us and everyone in every branch of the military, Air Force, Coast Guard, Navy, you name it, Army. Just want to say that first. It'd be remiss if I didn't say that. But if one wants to get in touch with me, very active on LinkedIn. So you can find me there, just Craig McGrother, which I'm sure will be in the show notes. And then if you want to also reach out to me to learn more about what we're cooking here at Lone Star Capital, feel free to give me a shout and send me an email. You can go to our website, Lone Star Cap, or it's lscre.com. And then if you want to reach out to me, my email is Craig, CRAIG, at lscre.com, just the acronym for Lone Star Capital Real Estate.
And while you're on the website, if you're watching this video, take some opportunity to download the books, or you can find them on Amazon too, right?
Yeah, absolutely. You can find them there.
Okay, about underwriting, because as an investor, it's important for you to understand the numbers, whether you are passive or active investors. Understand the numbers. So pick up the book and download those ebooks that's on the Lone Star Capital websites as well. So Craig, I want to thank you for joining us on this podcast this early morning in Hawaii. And this is the way I love to start my day, get the juice flowing, talking to good people. All the listeners, thank you for listening to another episode of the Multifamily Real Estate Experiment podcast. I'm Hutch the Marine Investor, out.